Good morning, everyone. So, in today's video, what I'll be doing is breaking down a New Zealand dollar, Canadian dollar long that I went in. And so the trade has already panned out. And so I didn't have time to set up the recording. I just started using a new recording app. And so I wasn't getting my audio to come in prior to the recording itself. And so I just decided to go ahead and take the trade and talk about the trade after everything panned out. So I went in on New Zealand dollar, Canadian dollar earlier this morning, and what I want to do is break down why I went in long on New Zealand dollar, Canadian dollar. Okay, so what we have here is the chart for New Zealand dollar, Canadian dollar, and this is the daily chart. And we zoom out a bit, we can see this price action, and we can see here for a while we had been in a quote unquote downtrend. So price had been in a sell program up into the beginning of this year. And then we had a nice market structure shift bullish right here on this candle. So that's later in January 20th. Market structure shift and break on that day. And I'll draw out that break here. So there's your daily market structure break. So I'm going to put MSB for market structure break. And let's decrease that font. 12 is fine. And I'll make it a dash line to indicate that it's a break. Okay. So once we had that market structure break, that's where my focus shifted towards a potential buy program. So when we think about our market maker models, we were on in a sell program here. So institutional order flow was bearish. And then with this market structure break, that indicated to me that we may be entering into a buy program. So we're moving from the sell side of the curve to the buy side of the curve. All right. So we're in a market maker buy program now. Okay. And so once we had this market structure break, my eye went to discount of this range. So I want to put on my fib levels. Actually, no, I won't do the fib. Well, yeah, I'll drop my fib levels. I'll just take off a lot of these levels because the most pertinent level for this range is discount. Okay. So we have this range that broke structure. We switched from a sell program to a buy program. And once we get down below 50% of this range, we enter into discount of this dealing range. All right. And so then I'm looking at my daily discount arrays to see which one may send price higher and continue this buy program. And the discount array that was used was this daily bullish order block. So I'll draw that out here. A daily bullish order block that I'll label as positive DOB for daily order block, like so. And I'm going to take my crosshair off. Okay. So once we enter that daily bullish order block, continue to watch price. We had our first opportunity for a buy in discount right here, but then we swept that low on the daily. Market structure shift on the daily bullish, and we can watch this high right here where it shifted again, and then we started to go higher. So essentially we had that happen again. So this same dealing range that was created right here, it happened again where we created another dealing range here, priced into discount once more, and then price started to go higher. So what I'll do is I'll move this from here to there. And you can see where we hit discount again into a daily bullish order block. Price ran up higher. We have a new dealing range from this high to that low. And now from here, so we had our break. All right. And then we had low risk buy down here. Price came up. First stage distribution down here. And then our second stage distribution happened at this low right here. And I do want to make sure that's being shown here on the recording. But this low right here. And so on some broker feeds, this long wick is part of a gap. Okay, so we have a fair value gap here on some feeds. On this feed, it doesn't show up that way. But what we also have is this up close candle, which is a breaker. And so in this case, I'm just going to draw out the bodies. And it's right there at equilibrium. I'll make it green. No border. I'll make it where it's not visible. Background. Oops. Can't see anything now. Background. Okay. Make that a little lighter. Let's do 20%, 25%. Okay. So that there is our daily bullish breaker. So I'm going to put daily positive BB for bullish breaker. And inside right. Okay. Now from that breaker that was at equilibrium of this dealing range, drop down to the 4 hour. You can see this here. So this takes me into what I was keying off this morning. So within this daily dealing range, we have a 4 hour dealing range from low to high. Right here, we have a propulsion block. And right here, we also have a 4 hour inefficiency in the form of a buy side imbalance, sell side inefficiency. Okay, so we come down, we wick through this propulsion block. So I'll draw that out here. I just want to get the bodies like that. And you can see here where the wicks did the damage, but the bodies tell the narrative about institutional order flow. and where it's going. All right, so up here, this last high is where we can anticipate for price to reach to. So that's the draw on liquidity. So that's our near term external range liquidity, which is inside of its internal range liquidity on a higher time frame market maker model. But for the sake of a low hanging fruit objective, this is a nice spot for price to reach to. And I didn't need to get all the way up there today. And you can see here where I bought in at with this green triangle, and then where I got out somewhere up here. And I'm going to zoom in on that so you can see exactly what I got in on. So this is a propulsion block, PB, a 4-hour propulsion block. All right, so from that 4-hour propulsion block, I want to drop down to the hourly time frame. And now here on the hourly is where things really started to get clear. All right, so this morning in London, we printed the low. All right, and I also have one more thing here I want to draw on the chart before I get into the price action today, and that is our New York midnight opening price, which would be labeled here, and it'll be annotated as this purple line and 0 o'clock. And the reason why I'm drawing that out is because I like to see price. If I'm bullish, I want to see price manipulate lower below that purple line to price in a discount. And then you can see here we would get nice advanced market structure. Okay, so we have this short-term low, intermediate term low, and then we have another short-term low right here. Okay, and so once we start to price up above here, and I'm gonna draw this out because all this happened in the morning. So this is going to be labeled as an H1 for hourly, H1 fair value gap, or buy side imbalance, sell side inefficiency, however you want to internalize that. That's how I internalize it. It's in fair value because it's in discount of this hourly dealing range. I draw a new one here. You see that there? So price is in fair value in a buy program because we're below 50% of that dealing range. All right. And so once we get down into that level, I drop down again to the 15-minute. So here's where it started to get really interesting. So this 1-hour key level is what I was basing my trade off. So this reaction that we got to not only an hourly discount array, but also this green rectangle down here. Remember, I go back out to the 4-hour. That's our 4-hour propulsion block. All right. So we're getting multiple time frames aligning. We got our higher time frame narrative, which is based off the daily. We got our intermediate term time frames, the 4-hour and the 1-hour, also showing us that price wants to deliver buy side delivery. Okay. And then we have our next time frame, which is the 15-minute, start to close above, or it did close above this sell side imbalance, buy side inefficiency. So a good indication that price, well, another good indication that price wants to deliver to either buy side or sell side liquidity. In this case, buy side is when we have a sell side inefficiency. So a sell side imbalance, buy side inefficiency, which gets priced over. Okay, so price closes over that inefficiency. And once that happened, I can be confident that when I drop down to the 5 minute, like what we got here, so you can see I entered in right here after 9 o'clock. Right after 9 o'clock, I went in long, and I was using 5 minute structure to go long, right? And so we have another dealing range, so to speak, here, but it's a market structure break, which happens. We take out this short term high and this short term high. And when price started to gravitate back down into the level that I was watching was this fair value gap, which it didn't quite get into it, which is fine because I took my entry a little bit above that area. So this inefficiency here, I wanted to see price get down into it, but it didn't have to. Okay, and so because it took out this short-term low, that made me even more confident that it's okay for me to get in, right? So I got in right here after this low had already formed. So I'm anticipating a turtle suit into a fair value gap and then for price to take off. Okay, and so all this happened prior to our high impact news event release this morning at 10 o'clock in the form of our JOLTS release. So that was our high impact news event release at 10 a.m. And I do want to take your attention to that candle because this is the 10 a.m. candle. So that's that high impact news event release where you can see we get a nice injection of volatility into the marketplace. Now, I entered in here right there, and then I had my stop loss right there. I didn't put it all the way down here below this low because I was like, well, if it's going to come all the way back down here, I don't believe it's going to take out this. It's almost like a propulsion block. Like I'm expecting this to hold up primarily because we've already priced below our New York Midnight opening price, and it doesn't really have much reason to get down there again. Now, if it did, this low right here and also this low could potentially have gotten taken out, but I didn't. Once we got all the way up here before the news event release, I've been in on the JOLTS release before, and my intuition wasn't telling me that price was going to get all the way down there. Okay. Now we did get a nice strong manipulation lower. Okay, so at one point in time, this green wick was a large down close candle. Like it was black. All right. And once that happened, the news event came out and then price started to shoot higher. All right. And it shot higher into where I sold my position for profit. Okay. You can see where I sold 0.62 lots at 82521. So I'll put that on here, 825. 82521. It's about right there. Okay. I'll put that on again. 82521. And then my entry, you can see here where I bought at 82233. So we'll put this to where it matches up properly. About right there. That's where I bought. And we got to account for spread too. But once I saw that short-term low, and then there was another short-term low right here. I was like, okay, I'm okay with entering in before it sweeps that low, and it did sweep it, and then it started to reprice higher. So it was like I was anticipating a turtle suit, and I didn't want to miss out on it. So I went in and got in before then, like before we took out that low. And sure enough, once I saw it take that low out, and then this up close candle printed, I was like, okay, we should go higher now. All right. And initially I was looking at these relative equal highs. All right, and those got taken out prior to our high impact news event release. And then once those highs got taken out, price jolted back down. So that name was fitting for the delivery today. But price jolted back down into here, this down close candle. And then right there, we have our bullish order block. So it priced down into that. And it was basically it's set up to where my entry was like perfect, right? Because that's where price priced back down into where I entered in at. And then it shot up higher for a nice 1 to 2 risk to reward. And so that's it. Like I was saying before, I'm expecting for price to get up here to our external range liquidity, but I only needed a 1 to 2 risk to reward. But you can see here where price is likely to go ahead and clip this external range liquidity. And I do want to show my closed positions for today. Okay, so here's today, NZDCAD, entry price. That's my stop loss and take profits. And then the P&L. So I risked 0.25% to make 0.5%. And we got that here. And so, yeah, that's basically it. I wanted to break that down for you guys. Stay tuned. This is a new recording software I'll be using. And I just need to get the feel for things before I actually did the recording. So that's what you see here. So with that being said, stay tuned. Thank you guys for tuning in. Have a great rest of your day.